Well, guys, prices in Riverside and San Bernardino counties are scorching right now, scorchingly hot. Prices, instead of falling off in the fall and winter like they usually do, have been climbing all fall and winter. However, what's strange is that none of the other metrics in this week's dataset supports such price growth. So the big question is, what gives? Well, we're going to try to dig into that and untangle this mess in today's Riverside San Bernardino real estate update for January 29th, 2025. My name's Jon Schwartz. I'm California's 1% homebuyer agent. Last year, I saved my clients $180,000 in realtor fees. This year, I'm saving my clients $1 million in realtor fees. Learn how you can be a part of it and schedule a time to chat at my website, jonsch.com. That's JONSCH.com. Now let's get into this week's data. And we're looking at the most recent weekly data from Redfin for the Riverside, California metro area, which surprisingly covers all of San Bernardino and Riverside counties. Right now we're looking at median sale price. Over here, the median sale price in Riverside, San Bernardino counties is up to $591,000. Now that's only $1,000 more than last week, but it's $2,000, just $2,000 less than the all-time high price peak in Riverside of $593,000. How in the world are home prices so high right now in Riverside, San Bernardino? Now we've popped over to the new listing median price in Riverside, San Bernardino. This is the median price that new listings are coming to market. Again, we are at an incredibly high point. In fact, an all-time high. This is the first time in recorded history that the new listing median price in Riverside, San Bernardino is over $600,000 at $600,493. How are prices so high? The short answer is, I don't know. The long answer is, let's look at the data, and I think we still might not quite know. Right now, we're looking at new listings. New listings is following the annual cycle of growing in the winter. This week, we had 804 new listings on the Riverside San Bernardino market. However, even though listings are growing in absolute numbers, we're actually falling behind last year's numbers. So last week, we were outpacing the same week last year by 2.7% in the amount of new listings that came to market that week. However, this week, compared to the same week last year, we are underperforming last year by 1.2%. Now, this could be one reason that prices in Riverside, San Bernardino are staying elevated. When fewer new listings come to market, that means there's less supply, and that puts upward pressure on pricing. Now we're looking at the number of homes sold each week. And as you can see, this year's this green line, we have a downward trajectory since the beginning of the year. At the beginning of the year, the first week of the year, we sold 751 homes in Riverside, San Bernardino, which represented 10.5% more than the first week of 2024. However, 2 weeks later, we're down to 635 homes sold, which is just 4.9% more homes than the same week last year. If homes sold continues its downward trajectory and perhaps falls under the slope that we saw last year, we should expect downward pressure on pricing because homes sold is the primary mechanism by which homes leave the market. If fewer homes are selling, it means more homes are sitting on the market, means more inventory, means downward pressure on pricing. To see where the homes sold metric is headed, we look at pending sales. Pending sales is a leading indicator for homes sold because a home goes pending about a month before it becomes a home sold. So this is the number of homes that went pending this week. Now, we started the year at 699 homes that went pending the first week of the year, which represented 2.4% fewer homes in the same week the last year. The following week, we fell to 9.2% below the previous year. And now this week, we're at 713 homes going pending, which represents a 10.9% contraction from the same week last year. Now remember, homes sold follows pending sales. So when homes sold is a couple percentage points above last year, but pending sales is double-digit percentage points below last year, it means you can expect homes sold to drop in the next month. So indeed, we should be seeing homes sold dropping off in the next month, which would mean a little more inventory on the market, which would mean, fortunately, downward pressure on pricing. When you combine homes coming to market with homes exiting the market, you get active listings. This is the total number of active listings on the market right now. We have the typical seasonal decline that we get at this time of the year. However, active listings started the year 22.63% above the previous year. And this week, with 12,610 active listings on the market, Let me clean up my doodles. With 12,610 active listings on the Riverside San Bernardino market, we are still just barely 20% over last year in terms of the amount of listings on the market. This is probably the biggest head scratcher when we're looking at these elevated prices. If there's so much more inventory than there was this time last year, why are prices so dang high? To add to the confusion, now we're looking at weeks of supply on the market, which has been growing all year. We started the year with 17.9 weeks of supply on the Riverside San Bernardino market, and now we're at 20.3 weeks of supply. We're well above the amount of demand-adjusted supply we had at the beginning of last year. We're far, far above where we were back at the beginning of 2022, and we are comparable to where we were in 2023, the beginning of 2023, which is just after rates doubled from 3.5% to 7%. So relative to recent norms, there's a lot of inventory on the Riverside San Bernardino market right now. So why are prices so high? All right, now we're looking at the average sale to list ratio. This is the ratio of where homes are selling to where they're being listed. Right through the middle, we have the 1.0 level, which is a mathematically equivalent way of saying 100%. When the line representing a year is above 100%, like this black line here, that means homes are selling for more than they're being listed. And whenever we fall below the line, it means that homes are selling for less than they're being listed for. Now, looking for 2025, this year, the green line, we see that the average sale to list ratio is lower than last year and getting lower. We started the year at 98.78%, and now we're at 98.71%. Now, 98.71% may not seem like much of a dip below 100%, but for anywhere in California, being under 100% is an advantage to buyers. I just realized I drew that number directly behind me, so now you can see the number I drew. And our last statistic, again, reinforces the idea that there's no reason prices should be so high. We're looking at median days on market. This is how fast the market is. Again, we're the green line, 2025. We're sitting here at 57.2 as our median days on market. This time last year, we were at 49.2 median days on market. The only time the market was slower than it is right now was back in 2023, again, right after rates doubled. Look, the market fundamentals in Riverside, San Bernardino do not support such high prices. It's a flat-out mystery to me why prices are so high. What is going to happen? Well, stay tuned to see the next Riverside San Bernardino update, which should be in 2 weeks. Also, if you're planning to buy a home this year in Riverside and San Bernardino counties, check out my 2025 California Homebuyers Guide. It's updated with the latest conforming loan limits, the latest agency rules about how you have to work with agents as a home buyer, and the latest regulations from the state regarding homeowners insurance. If you think 2025 is your year to buy a home, definitely check it out. I'll see you in 2 weeks.